Welcome to Trading Lounge and the commodities report. We're going to look at Bitcoin and Ethereum and maybe GBTC and then dollar bonds and yields and gold and silver and base metals and energy. So, Bitcoin daily chart. We're looking at wave 3 and 4 here, and then 1, 2, 3, 4, 5 here. We didn't make a really good high over here, but I'm sort of looking at it being wave 1 and 2 here, because if I look at GBTC here, the Grayscale Trust, we can see a nicer 5 waves up here of 1, 2, 3, 4, and 5 up here. So we kind of really need to understand the pullback here, which we can do. And yeah, I'll just want to put on the trading levels for this here. So yeah, so that's that. So basically 3, 4, and 1 and 2 here, very much sort of in line with a lot of other markets around the world in terms of stocks and so on. So coming back to Bitcoin here, so we're looking at 1, 2, 3, 4, 5 to the upside. I think I might just have a look at my Bitcoin chart here. So from this wave 4 low here, this is just the intraday here. We're looking at 1 and 2 and 3 and 4 and 5 up here, and then pulling back for wave 2. Now, what I need to talk about, there's two ways that this could unfold. First of all, this wave 1 here, we could look at this as an A and a B and a C wave here. So that would look quite good if I went back to this charting program and just checked in on this on, let's go to, I like 15 minutes as a thing to start with. So you can kind of see here that it does make a nice sort of ABC pattern here at this stage. So the market could move up from here, and I'll just need to put this into perspective here. So just give me that, so it's done there. So it does make a nice ABC pattern here. We're getting a bit of an impulse wave here, so that is healthy. So what we'd like to see is more of an impulse wave coming into play here in terms of something that would push up a little bit higher at that point, you know. So let's just see how that plays out here. And yeah, we also need to have a look at the corrective side. So if we see a nice 5 waves up here, I suppose another way to view this too, many roads to Rome. So this is the 38.2% retracement level here. So if this was, let's say, down for 1, back for 2, down for 3, and back for 4, so basically here a little A, B, and C for 4, and then come down. If we get that move down here, then we're going to get an A and a B and a C wave over here, and then we're going to come down. We're going to come down here. So that means that this here would be over here, and then this would give us 5 waves down. 1, 2, 3, 4, 5 waves down, and then the B wave would be back over here, and then the C wave down here for wave 2. So they're the two ways that it can play out. So if you see it push up above the 50%, you know, nicely up here, then you'll know that the scenario is that this is the A, the B, and the C wave over here. Whoops, over here for that. So there's two ways that could play out, and I'd like to have a look at that here. Yeah, I've done it here as well. So basically, we could look at it as an A and a B and a C wave here, and then push up from that point. So getting support on top of 68,200 with a classic trading levels pattern. So you want to see a little pattern on there on the intraday, you know, on a 5-minute chart or 2-minute chart that looks a bit like this if this was the 68,200 here. So you have to wait for the first high above the level, and then that becomes your, don't go trading that up there, because it could still be a wave 4 at that point, and then continue to come down, retest this here and drop at that point. So you don't want to go too early if you don't know what you're doing. But once you got that high in, the second high or third high, then you could buy those highs. And buying highs is good because it's, you know, the market's proving to you that it's strong, and you're picking it up right on the point of power, just like a person surfing a wave. So we don't know if this is an A, B, C, C pattern here and going straight up, or we got 1, 2, 3, 4, and 5 to come down here, and then that would become the A wave here, and then the B wave back up here somewhere. We can work that later, and then the C wave coming back at this point here. So that's a real possibility. We got those two moves there. If we have a look at Ethereum here, we can look at this here from this wave 4 here as 1 and 2 and 3, 4, 5 up here for 1, and then an A wave, a B wave, and then a C wave coming down. Now the C wave here can fold in two ways. First of all, we can go 1, 2, we could go 3 here and 4 here, and then 5 here, and have the low in place, and that would be the C of 2, and that's the low. So that's quite possible. Okay, so we'll just take that on board. So the low can be in here today, right now, all of that sort of stuff. Also too, we could view it as down for 1, back for 2, down for 1, back for 2, and down for 3, because it does make a nice third wave here. So once again, we've got that fourth wave here, and then the fifth wave down here, and then the fourth and the fifth. So it could play out either way. So you'll just need to be mindful of that. Of course, we can go long this high up here, but we'll get better. We'll do better than that. I also kind of want, because these are kind of moving with the Nasdaq a little bit. In fact, they're not at the moment today. They're not. I think they got Nasdaq pushed up with Apple, but we wanted to get past the core CPI figures and the Fed speak tomorrow, in the next session, rather, the 12th today. So once that's done, we'll have a little better idea of that. So that's Bitcoin, Ethereum, and the ETF GBTC done. So we need to go to the dollar bonds and yields. So just bear with me a second. I'll find that chart over here, and if we go to the bonds first, we're basically looking at daily chart here. We're looking for an A wave and a B wave and a C wave. It could also be 1 and 2, doesn't matter at this point. So we talked about calling this low in place here and looking at this first, waiting for the first impulse wave to come up and then pull back and then move up. So it's kind of doing all the right things, and we're back in the same space here as well, in that we had 5 waves up here, and then we're looking for a pullback. It's a little bit holy to say to work any count in here, but I was based it on the US dollar. I was basing it that would have an A wave coming down, a bounce off the 90 here, which we're getting now. So this B wave coming in, and then still one more move to come down at that point here for a C wave. So an A, B, C basically, and then a move up at that point. We can move all of that and move those around and so on. So that's what I'm sort of thinking with the bonds. But I also have to point out too that this 1 and 2 and 1 and 2 here, that can also be, realistically speaking, an A and a B and a C wave here, corrective wave. And this here can be bearish in terms of down for 1, back for 2. So down for 1, back for 2, and down for 3 here, 4 and 5. So it could be like that. So we don't know yet. We don't have enough evidence. They're both valid cases, but based on what we've got here of an A and a B and a C and this and that, we're looking at this to move up. That's the bias, but it's not really confirmed until we take this top out. Once we take the top out of this wave 1 here, then we'll be on that pathway, right? But as it stands, the reality is that, sure, that can be an A wave and a B wave and a C wave here. So it's just the previous structure that would suggest that we're going up here further, but we need evidence of that. So we'll need a nice clean break above that top there. Or later on, we might be able to use the second high, you know, all of that, all the normal stuff that we do. So if the bonds are doing this, and we've got the alternative counter coming down here, then the yields and the dollar are doing the same. So if we look at, they're doing the opposite, same but opposite, same but different. So with the 10-year yields here, we're looking at this coming down as an A and a B and a C wave coming down. We could view that a bit differently as well, but we have this first 5 waves here, so we looked at it as being wave 1 here, and then wave 2 here. And last week, whatever, we've been looking at this particular top here as being, if we're looking at this being bearish, then this would be the invalidation point at this wave 2 here. So it does appear that we've got a nice 5 waves down here. We were talking about that before, and then we're looking for a bounce, and we've got the bounce. So the A wave here, we're looking for a B wave, which is pulling back now, and how far it pulls back, don't know, doesn't matter. And then the C wave to the upside, and then we need to see it turn down at that point for this to be valid. Because once again, even though we're calling this bearish here, we only have 3 waves here. So the same as the bonds, we could actually view this as an ABC pattern here, and then we could just be going up from that C wave, So we've got a bit of time to work through this particular pattern to figure it out here. In the meantime, you could short this, we could short that if it gets triggered at this point, because if it's bullish, it won't be getting triggered, it'll be going up at that point. So we just need to give it a little bit of time. So this is doing the mirror opposite of the bonds, and this would also be doing the same this will be the same image as the US dollar, but the US dollar has got a slightly different count coming down here. So when we look at the dollar on the bearish count, it's the same as the yields on the intraday, in that we're looking for an A wave, a B wave, and a C wave to the upside, and then turning lower at that point. Now, this move down, so in the bigger picture here, we're looking at the move down here. It's the A wave and an A, B, C for the B wave, and then down for 1 and back for 2. As I'm always harping on about, I don't particularly like it as a wave 2 because it's really big compared to the to wave 1 here. So there's a chance that this could be bullish here, but this is the bearish count, and to prove that it's going to be bearish, it needs this low to be taken out here. The move down here can be counted as 5 waves, but because there's overlap, it could also be counted as corrective. So the bullish count for this would be that on the daily chart here would be going higher up. So all the big move down through here would just be the A wave, and then an A, B, and C wave up here. And as I mentioned, if you took on the dollar milkshake theory, we could also view this as being the end of a correction here, because the volume was diminishing as this was coming down through here. It wasn't increasing, it was diminishing, as you can see here. So it reminds me of a corrective pattern. So this can be bullish here as well, which basically leads us into looking at the other just going to the website for a moment, just going into forex charts here for a moment. So when we have a look at say the Aussie, or the Aussie, the pound, they're all the same. So basically this top here would need to be taken out here to prove that this is wave 1 to the upside with an ABC pattern here. So that top would need to be taken out if this could continue to come down at this point, But what we do need to do is we need to be long above that point there. So here, confirmation here above that B wave here. And this will be the same for, for the pound, the euro, with the euro here, it'll be the same here as well. It needs to take this top out here as 1 and 2 here. And in the bigger picture here, it's taking the B wave top out here. So that may or may not happen, but if it does happen, then that's good to go at that point. This drop here is very much like Bitcoin, actually. That's interesting. So that could also just push straight up from there as well. But we'll see. It doesn't really matter. If those tops are taken out, then we can go long at that point. The same for the cable as well. And I think Malik has the dollar here in the same way. I'll just check what he's got here. Yeah, he's got the same thing here. So wave 2 with wave 1 ABC for 2 here. So in the B wave, and then the C wave to move up at that point there. So that's the dollar bonds and yields. And this, once we understand this here, either being bearish or bullish, then it's obviously going to dictate, what all the FX is doing, all the primary counts, and from the primary count you can work out what the secondary markets are doing secondary crosses, and down the pipeline you go, you know. But we can't confirm it at the top end of town, so we have to just be a little bit patient with all of this. So then we come over to Goldilocks over here. I'm not talking about Goldman Sachs, I'm talking about gold. So in a nutshell here on the daily chart, this is a CFD product here, US spot gold, and basically we've got wave 1 here and 2 here going up for this wave 3 over here, and we're looking for 5 waves to do that. So in those 5 waves there, we're looking at wave 1 here and wave 2 here, and then wave 3 up here and coming back for wave 4. So basically we're in the bigger picture in this wave 4 business here. So this wave 4 could pull back to the previous wave 4 or to the 38.2% here, and wave 4s get ugly and so on. So I thought we may have had it at this point, wasn't the case. Now we're here, so we need to understand this a little bit more. But when you look at the 38.2% of the wave 4, 1 lesser degree, you would think that it hasn't got, you know, far to go to the downside at this point. I'll just have a look at GDX as well. GDX is in the same boat. I think we've got one more little low here as well for this wave 4, and also to look at this, you know, wave 4, previous wave 4 low in here as well. So I'll give you a bit of an idea. It may or may not come down that far, but I think it still needs to come down a little bit further. But we're going to have a look at gold and silver on my other chart. So US spot gold here. So basically wave 3 up here, and we've got 1 and 2 here, and 1 and 2, and the third wave, the fourth and the fifth for the third, the fourth and the fifth. So we're looking at this being the A wave here, the B wave up here, and we're talking about this now. First of all, I could put wave C here and it's finished, and wave 4, that's doable. But based on what the US dollar's doing, and they seem to be in tune a little bit at this point, that means that we're talking about, let me just clean my mess up here, but basically yesterday we're looking for a bit of a rally while, you know, the yields pull back down, so to speak. It does look like we've got an impulse wave here. That's kind of interesting. Not quite, should get another high there. I'll just keep a bit of an eye on it. But one of the things here is that this low here, this is the 40% here. So we'll just allow it to get to there and we'll see what it looks like. So it can push up here, one more push here, so that would give this the A wave, the B wave, 1, 2, 3, 4, and 1, 2, 3, 4, 5 up here. So we'll see if this turns down at this point and gives us a move down like this. This will be like wave 3, and then wave 4 here, and then wave 5, and we'll finish here and then go up at that point. But the interesting thing here is that if this here is 1, 2, 3, 4, and 5 at this point, then we can also look to go long. So we can go long on the second high here. So that's something that we'll be looking for in the next session, just in case it does move to the upside. Let's just have a quick look at silver as well. It won't be far behind. Okay, silver's made a new low, so we're looking, same thing applies here. There's a couple of different ways to count this as well. As I mentioned before, I've got this as the A wave here, the B wave here, then wave 1 and 2 here, and then 3, 4, and coming down for wave 5 here to finish off. And it's bubbling along that trend line there. Now, you could also, you know, put this here as wave A here if you wanted to as well, and wave B here. So there's different ways to look at all of this, but you've got to kind of, well, you don't have to do anything, but tying it in with the US dollar and the yields and the bonds, it seems to be sort of working with it at the moment. So when they are tuned in, we can use it. When they're not, they're not. We can do the opposite. But I don't think it's quite landed here just yet at this point. But if you're not here at the time, then we're looking for a classic trading levels pattern across this level, across the $30 mark here. That would be the entry at that point. So the arrival, the reaction, the first high above the level, the ABC, and that's just this standard picture here. So you have to, if this is the level here, then you have to wait for the first high above the level, then that becomes the trigger, then that becomes the trigger, then that becomes the trigger. And once once you're buying new highs, if the market is pushing up and going through old highs, it's telling you that it's strong, and that's when you need to step on that wave. So we're getting to the end. We're just not there yet, and you've got to kind of consider what we just talked about with the I'll just go for the yields. It's a little bit easier. So the yields here have got this move up here. The A wave is normally sharp, and it's got to do the B wave yet, and then it's got to do the C wave up. So when that pushes up here, then you may see gold and silver push down at that point. So not well, in this one here anyway. So when you kind of anyway, you'll line it up. So that's gold and silver. So they're basically still in their wave fours, but they're at their later stages for GDX, gold and silver. So we're not quite there just yet with that. And then we can look at what's next, base metals. So let's just bring that other chart back up. This one here, and we can look at uranium. So while the dollar's pushed up, it's putting a bit of pressure on these sorts of markets. So there's a couple of ways to look at this here. We could view this here as a smaller wave one here. I think this is what Sumney's got here. This is one way to look at it. So I could just fill the dots in here. Not that it matters. We'll pick it up when it matters. So looking at this, it's got it 1 degree smaller, but it's okay. So we could look at this here as up for 1 here, and then back for 2 here, and then moving up. So it's either this wave 2, and we put that in here, or we're going to have a larger wave 2 here. So yeah, I can see that we can count. This here, to me, is telling me that we need to come down further here. That's what it's doing. This here, for instance, is just a little 1 and 2 here and 3 here. So we need this little 4 and 5. And then I can see that we've got this here at least. So this is going to create another one in here. So we're going to be down here somewhere at least, down on these lows here. So nothing to do here. Once again, once this finishes off here, the worst case scenario, to be long would be looking at this picture here, bringing this long over to here. So, but we'll pick it up before that. We don't know how deep it's going to come yet. We don't know if this is going to be an A wave, a B wave, and a C wave down here, and then go up for this wave 2. We don't know that yet. So there's nothing to do. But in the bigger picture, this is the arrival, the reaction, the first high above the level. And we're looking for some sort of ABC correction. It'll show itself up in due course. And we want to have a look at copper. So we had a look at this on the intraday. I won't go in there at the moment, but the intraday was basically looking at 5 waves to come down here. So we're going to be looking for a rally and then another move down. So in this case, we're in a wave 4 as well, but we're going to be here for a little while. So any copper stocks will be going through this. You're going to see the BHPs of the world, or any copper stocks, under pressure at the moment. And this also can be brought in line with the dollar as well. So we're definitely not here, and we won't be buying any move to the upside here. It'll just be corrective if it moves up, because this is 5 waves to the downside. So we want to have a look at the energy sector. So let's just go over to, I'm just going to do gas first because it's on this particular chart. Just got to find it. And in the bigger picture, this is what we're sort of looking at here. So I feel like we still need to go up a bit higher for natural gas, and then wave 4, and then wave 5 over here, and then an ABC pattern for the B wave and C wave to go up here higher. So we had been looking at this here on the intraday. So I'm just going to, that's all good. Just Okay, that's all good. I'm just going to go, I think we're on the 15-minute chart, but we can do 30 as well. Yeah, so, okay, so we want that one off there. Yeah, that's right. So basically, we're looking at this same thing here. So we still need to go higher. That's all I can say. And what I don't understand is that this little move that came up here, I don't know if I need to put wave 4 over here or put it here. But I can see the little 5 waves in here as 1, 2, 3, 4, 5. I can see 1, 2, 3, 4, 5 here as well. And so I need this to finish off, and there's still more to come. So this here will be 1, 2, 3, 4, 5, and then there's going to be this one here, so we're going to have this 4 and 5 here. And what I don't know if I need to include this one here, so I don't know if there's going to be this and this, another one here before we get this correction for wave 4 here, and then wave 5 to the upside. So I'll just remove that there. So we've either got it at this top, or this top. So yeah, still high to go there. And if we look at crude, I'm going to go to my other chart on this. So the crude, we also had a detailed look at this particular move to the upside the other day. I'm not going to go into it now either, because it's just of no interest at the moment. And we need to push up here a little bit further to get that wave A, and it may even get to the 80 here, because we're counting all this up as an impulse wave. And then we need wave B and then wave C here for this, and then we'll see if we roll over at that point. We'll see what it looks like at that point, because we can view this here as an A wave, or wave 1 or wave 2 here. So the short trade will come under the B wave here, over this area here, but it won't be that simple. It'll be more like 5 waves down to the last consolidation, and then an ABC back up here, and then we'll go short under the B wave, if that is indeed going to be the case. And if we've got an ABC here with 5 waves here, well, then we can go long above the C wave here. So we'll be putting our trading hat on across the 80 when it's due course there. Okay, I think that's it. I'll leave it at that. Thanks for tuning in. Cheers.